Hey guys, it's Chris Wong. I'm filming this video as of May 1st, 2025, and I'd like to talk about the mindset or getting raises as an employee versus being an investor in monthly income ETFs. So as a disclaimer, I'm not a financial advisor. I'm just guys interested in building a portfolio. So I just actually have a few minutes to film before I walk into my workplace. I know I just started raining, but right now with my lifestyle, I'm having a hard time trying to find time to film. So I'll just do it right now. So the mindset as an employee to improve your income is that you have to actually work hard. You got to work smart. You got to get on the good side of the boss. There could be a lot of different scenarios just to try to improve your income. You got to actually work hard at your job. You may work for like several months. You may work for a year before your boss finally gives you a raise. Your raise may not be as high as you expected, or it could be what you expected. Many things could happen, like a year later when you finally get the raise, your boss may not give it to you. You get a new boss and then the new boss doesn't give it to you, or the company you work at is not doing well anymore and they cannot give you a raise, or they may have to lay you off. So I was doing some calculations, and these are just approximate calculations, and I actually calculated how much money you can earn in 1 year if your boss only gives you a $1 raise an hour. So that means you're working 40 hours a week and you work 5 days a week for the entire year. So approximately your annual raise is around $2,000 a year. It could be more or less depending on whether you call in sick or whether you work extra hours. So when you're actually working hard or you're working smart to try to get the raise, you have to spend time to go to work. It takes time out of your life to go to work, whether it's a job you like or it's a job you don't like. You got to actually spend time to earn income. I had experiences years ago when I've had jobs where I worked there for at least a year, and after 1 year of working there, they said I did really well, but they only gave me 11 cents raise, which was a 1% increase from my hourly pay. And this was the time I was working minimum wage. So I actually calculated what the yearly increase in the pay was, and it was around like $120 a year that I got an increase. So looking back at it, the increase I got working there for at least a year of $120 for the entire year is not even enough to cover daily expenses with inflation. Or if all the businesses you like to buy your stuff from, they all increase all their prices. Now to talk about the mindset of investing, like the type of investing I like to do. I like focusing on monthly or weekly dividend paying ETFs that are based on the indexes, and maybe a couple that are just based on one company. So my ETFs consist of Canadian and US listed ETFs, and I have Canadian ETFs like HYLD, USCL, QQCL, and most of their dividends are actually consistent every single month. Not one dividend is ever missed, and if they have to lower the dividends, it only lowers by like a couple cents a month. So as an investor, I think about the long term. As an investor, I think about holding on to them, and I think about reinvesting. From the point of view of the investor, when the investor collects monthly or weekly income, they don't actually have to go to work to collect the dividend income, but they have to actually work a job to get started and to earn money in order to put into investments. So the dividend income from the investments, I look at it as it's guaranteed income. I look at it as there's a guaranteed raise in the dividend income every single month. Now that depends on whether it's the ETFs that pay consistent dividends every single month, or they have variable dividends every single month or every single week. But I compare all the ETFs I have with the indexes, and most of them are almost in line with the S&P 500 or the NASDAQ 100 with the total return. So if my dividend income end up decreasing a little bit for the next month, I'm not stressed about it, because I didn't have to go to work for 40 hours a week to earn that dividend income next month, because I already hold the investments. but I didn't have to go to work in the past in order to buy the investments. But as an employee, if I were to expect a raise and my boss doesn't give it to me after all the hard work putting in, then that's going to stress me out. And I think that will stress out many people. Hope you guys liked the video. If you liked the video, please give me a thumbs up. Otherwise, please subscribe to my channel for future videos. Thank you guys for watching.